Hello and welcome to Dukascopy TV. Today I'm joined by Bjørnar Tonhaugen, a senior commodities analyst with Nordea Markets, to discuss how rising oil prices are being affected by the deepening crisis in Egypt. The price of US light crude oil hit a 14-month high on Wednesday to over $100 a barrel amid concerns over political turmoil in Egypt. Are prices going to continue rising?
Well, I agree that the crisis in Egypt has helped push oil prices somewhat higher in recent days. And the concern of the oil market is mostly, I guess, on the potential spillover effects of the renewed political uprising in Egypt on other countries in the region which produces more and exports more oil than Egypt does, because Egypt is actually a net oil importer. And then another key factor and worry for the oil market is the Suez Canal and also this pipeline that runs from the Red Sea and towards the Mediterranean, whether we will see some disruptions to shipping traffic or oil flows, but that doesn't seem very likely at the moment. We don't know how bad this can get. Now we have a new president already in Egypt, but I don't think that this unrest will quiet down immediately. The worst case scenario, I think, is if this turns into a more like a civil war kind of situation, and if it also has spillover effects to other countries in the region, for instance in Libya or Iraq. If that were to happen, and that would hurt oil production in these countries, then we would see a major spike in the oil price. I think that if this crisis is only contained in Egypt, then I don't think that oil prices will rise very much based solely on what's going on in Egypt. We could probably see some more upside, maybe a few dollars per barrel, but if it doesn't spill over to other countries or affect oil production or net oil productions and demand in Egypt, then I don't think oil prices will rise very much based solely on this. But some more upside, I think, we could see.
And while we've seen some major unrest in Egypt that has led to a low supply, Russian oil shipments to Europe have slumped to a 10-year low, forcing refineries across the continent to pay more for scarce supplies. What are the main reasons for this slump from Russia to Europe, and how will this affect the Eurozone?
One major trend is that European oil demand is declining, and it's still declining this year. So that demand for oil is lower, and Russia is supplying oil to Europe, but also to other regions of the world. And Russia has expanded its distribution network quite significantly now, so they can choose where they send their oil depending on where they get their best netback of it. For instance, growing exports to Asia is probably one reason, and also that demand in Russia itself, domestic Russian demand, is also at least rising a little bit. And the refineries in Russia are now producing more oil products themselves, so that it keeps more of the Russian oil, the crude oil at least, in Russia. But I think on the margin, this development may at least hurt the European refining sector a little bit more. The European refining sector is already struggling, and this just puts another weight to the stone if it makes kind of Russian oil prices into Europe even higher on the margin for European refineries.
Some analysts are saying that growing North American oil supplies promise to aid US energy security, but already they're helping deliver a more global benefit, stable oil prices. Do you agree with this?
Yes, I agree to a certain extent, because what is happening in North America is truly a revolution in terms of oil production growth. But what's very important to acknowledge is that even though U.S. oil production is increasing very rapidly by, for instance, almost 1 million barrels per day this year, global oil balances also need substantial new oil supply each year from various other oil-producing regions in the world. So our view is that even though the U.S. oil supply is the single largest contributor to supply growth for the oil market. It's more a supplement to keeping oil balances more well supplied, to put it like that. But we still are very dependent on substantial investments in other regions of the world just to keep oil markets in balance. So the U.S. Shale revolution is not alone enough to keep oil prices steady or stable, but it at least has removed some of the upside to oil prices, at least in the near to medium term.
And that's all we have time for today, but do check back for more as we follow how oil prices are being affected by these events. Bye for now.